Hey everybody, welcome to Trading Capital Exclusive Analysis. In today's video, we're going to be touching base on natural gas, oil, and then we're going to dive deep into a couple mega cap stocks and observing some of the trends that we're witnessing and seeing. Interesting price action in natural gas. You've had a beautiful 3-day pullback. We have entered this official short squeeze zone, so any day now we could see another big impulse move like we did over here. Full disclosure, my members took profits on our oil trade near the highs of the session, and I'm actually looking very intrigued to buy oil again off of this healthy pullback. What I think we could actually see is, especially if the markets continue the weakness from today, if we get another little pullback in natural gas, I'm hoping to get a quick intraday flush down to this trend line. That's where I would be buying it on the long side if you haven't taken a position already in natural gas. So again, I'm looking for, even this level right now is super healthy, very intriguing to buy for a potential long. Really, you want to try to maintain this green bar impulse move, but even if you get a pullback down to this trend line, that still tactically remains more bullish and it could be a nice buying opportunity. But a healthy 3-day pullback in nat gas, the volume is subsiding a little bit, which means that the sellers are slowly starting to be exhausted. But you never know, this could go down a little bit more with market weakness, but I am looking to potentially buy this again on the long side. And what I'm observing is, even if you look at AR again, a natural gas stock, it is still roughly holding its impulse green bar breakout. It is leading the price action of natural gas right now, and I did take profits at the highs, but it is looking like it's forming a bullish pattern here on nat gas, or on AR, to move higher. Even with the incredible market weakness and a little bit of weakness in natural gas, notice how AR is holding its impulse green bar breakout. And then when you look at natural gas, it on a relative basis has pulled much deeper, testing really the low end of the range here on its impulse green bar breakout candle. So clearly there's a little bit more relative strength in the actual natural gas stocks itself. And that means that the likelihood of this continuing to break out is very great. You always want to see the actual underlying natural gas stocks lead the underlying commodity, because that is showing that you have more speculation. You're looking, investors, traders are looking for more of that leverage play to natural gas, and that is super healthy. If you look at EQT, another interesting name, also still holding roughly near the highs of its impulse green bar candle and putting a nice daily consolidation right above the 1-year moving average. And let me repeat, this stock has broken out of an inverse head and shoulders, which makes me think that even if we have market weakness in the S&P and Qs and the overall broad market, this could be an outlying stock that stays relatively strong on the long side, even if the market starts to fall. But again, you're going to have to need natural gas to make a move higher for these stocks to continue ripping, because if natural gas goes back down to the lows with a falling market, then those EQT AR stocks are certainly going to see more downside. One stock I want to touch base on is Microsoft. Microsoft had some very intriguing price action today, and what I mean by that is Microsoft had a high volume reversal. Microsoft actually made a brand new 52-week high today, closing or piercing around the 323 mark, and then it reversed and completely engulfed the previous 2 daily candles. And not only did it engulf the previous 2 daily candles plus make a new nominal high at resistance, it did it on volume. You traded more volume on Microsoft, roughly over 30 million shares today, any previous rally since you really saw this little bit of a distribution candle. So from this whole float rally, today's volume was much higher than this whole little rally starting from basically the 306 level. So pay attention to Microsoft, because I firmly think Microsoft has put in a top. The market hasn't yet, but Microsoft has, in my opinion. And if Microsoft's put in a top, it likely means that the broad market is probably very close to doing so. I mean, if you look at where Microsoft rallied from the new year, basically right around here, Microsoft has been one of the outperformers in the Qs in the S&P, bolstering a 46% gain, way more than Apple, trading up over 43% just since the start of the year. We're talking about a multi-trillion-dollar name up 43% in roughly less than 2 quarters. That is a parabolic move, to say the least, in a mega cap name. and I do think it's going to see some profit taking in the near term. And the big question is, will the remainder of the market do so? I mean, you saw Tesla with a nasty reversal today. Meta showed some distribution. Apple was down. Amazon had a little bit of a reversal back down to the low end. Google has also seen a little bit of a couple distribution candles. So starting to see some potential profit taking in the mega caps. Not enough to say the market has topped, but I definitely think some individual names have seen the near term top. Let's move along to the oil market. So WTI crude has actually had a positive session today, and it was a late little hourly surge. What I'm observing at crude here is this little bit of a picture perfect symmetrical channel, and you can see that this trend line has kept you in check for quite a long time. You even had a breakout above this level, which kind of failed and gave back the overall trend. So there is a scenario where you could break out of this channel again, since you did it once over here and you made a low and you didn't touch the low end of the channel. You actually still pretty much had a higher closing low, but you did make a new wick low. But needless to say, oil's trying to break out. If it breaks out of this channel, I think really where the stopping point is going to be is if you take your November 2020 trend, where you had an epic bounce in December of 2022, that's going to be your next big resistance on oil. So we're talking about a potential move to $78. I think that's probably going to be a high opportunistic short on the energy market. You can see that if I draw another trend line from basically this pivot high down to this area, you can see a confluence area sitting really at the beginning of June here, right around that $78, $50, $79 zone. So pay attention to that level, because it should act as decent resistance if oil breaks through this channel, over the coming sessions. Lots of moving parts to this market. Obviously, the markets were down today. You saw an interesting one was the Russell. The Russell was leading the market higher today, up over 1%, and the Russell actually got rejected right off of this bear flag range. This is forming a beautiful picture-perfect bear flag. You have a big bear flag, a major bear flag from this pivot to this pivot, all bearish consolidation. You have a micro bear flag from this pivot high to this pivot. Basically, two bear flags give you two downside targets. And considering you did have a high volume reversal, finishing the day with a nice hammer candle reversal off of the top of that range, puts it into probabilities that you may test the low end of this range. And if you test the low end of this range, you could actually break it. So if the Russell led the market lower and has really been putting in this bearish chop as the S&P and the Qs have been moving higher, if the Russell starts to break out of this range, you're likely also going to see the S&P and the Qs under some near-term pressure. So definitely be mindful that there's a lot of negative news regarding the debt ceiling transpiring. Today you got some interesting economic data. Basically, on the Canadian front, you saw an increase in the the raw materials price index. So a big increase. The forecast was minus 24.5. It came in at minus 10.8. So a big increase, which could be meaning that inflation is coming back. If I scroll to the beginning of the year, you had Japan's core CPI coming hotter by 0.2% more. So that's a big jump in Japan's overall inflation. And maybe that we're going to see a resurgence in the overall CPI in the States as well. And with what yields have doing, interest rates, they've been certainly surging higher recently over the last 2 weeks. And what that's pointing is that maybe we are going to see a resurgence in the U.S. inflation. Today we got the manufacturing PMI collapsing down to the contractory territory below 50. But then you look at the services PMI, it held strong above consensus. So what this is distinguishing is that we have a very weak manufacturing sector, and the economy is being kept up by the services side. So service-based stocks have probably been doing a lot better in the economy, whereas manufacturing stocks are starting to get a hit. My opinion, manufacturing leads the services, and right now this is contracting. So will we eventually see the services side contract? When you start to see both contract, that is never a good sign for the economy, and that likely means we are heading into a recession, or if not in one. New home sales came in better than expected on both the April sales and the month over month. So that spiked yields, that spiked the dollar initially. What's interesting about the new home sales is that even despite better economic data coming in better than consensus, why did the home construction ETF sell off today? It sold off the last 3 days on heavy volume. You would think that better than expected home sales would continue to push this indice higher. Well, that's not the case. And one of the reasons I think it's not the case is because you are now having the market pricing in, okay, if the housing market is strong, that means inflation's going to come back. If the Fed is seeing that the housing market is strong, they're likely going to have more room to tighten. And really, if you think about the housing market as a whole, it contributes to more countries' GDP than most any other sector. So the housing market in the US is roughly, I think, 15% of GDP. It is responsible for millions and millions of jobs, not only in construction, but real estate, legal side, etc., etc. If the housing market stays hot, that's going to push inflation higher. And again, I think we need to see more slack in the housing market in order for inflation to truly come back down to the nominal targets that the Fed have set around that 2% range. But right now, if the housing market's strong, it means that the Fed is going to have to tighten more, which you're going to see the long end rates shoot up higher. You're going to see the short end rates shoot up higher. And I think that's what the ITB is responding to right now in kind. On that note, thank you all for tuning in. Please give this video a big like down below if you found it educational. There's tons more economic data throughout the rest of the week, so definitely pay attention, especially to that 8:30 time frame data where typically the hot button issues start to come out. Take care.